Good afternoon and selamat sejahtera. Ladies and gentlemen, welcome to Asia Water 2020 Alternative Finance Strategy for the Water Sector Virtual Conference. I am Hani Zarina and I am your MC for today. Before we start the webinar today, there are a few rules that we have to adhere. All microphone and video of attendees have been muted. If you have any question, please wait for the Q&A session or do list them down at the Q&A box. If there's any internet disruption during the session, kindly be patient and try to sign in again. In this session, we have our moderator, Dr. Chin Yun Keong, Chairman of Strategy Plus Framework Sdn Bhd. Dr. Chin is actually retired as a partner of an international Big Four accounting firm after 34 years with the firm in UK, Vietnam, and Malaysia. The next speaker, we have Mr. Charles Dalfew, Senior Water Specialist from World Bank. He has 5 years in experience in private sector in operations and engineering of water and sanitation systems. Also, he has 12 years designing, implementing, evaluating water and sanitation program and sector policies at the World Bank. Okay, our next speaker that would be YM Raja Amir Shah Raja Azwa, Head of Debt Capital Markets for HSBC Amanah. He led the world's first United Nations Sustainable Development Goals Sukuk for HSBC Amanah, as well as arranging 1 billion Sukuk program for Consortium KAJ, the largest Sukuk program for a specified water supply infrastructure project financing. And also our last speaker, that will be IRTS Haji Muhammad Hanifa Haji Abdul Hamid. He is actually the Vice President of Malaysian Water Association. IR Hanifa is actually a professional engineer registered with the Board of Engineers Malaysia. He is also COO of IWK until the 23rd October 2020. His expertise is in infrastructure developments, water and wastewater management, and river management. Okay. Without further ado, let's welcome our moderator, Dr. Chin Yun Keong. Dr. Chin, the floor is yours.
Thank you so much. Good afternoon, everybody. Today, this afternoon session is on alternative finance strategy for the water sector. As you all know, one of the biggest challenge for the water sector is to seek for funding. Now, most of the time in developing economies, and Malaysia is no exception, and the development of the water sector has always been done at the speed of public funds. So today, let's hear from our panelists what are the various ways of alternative funding for the water sector, which does not necessarily allow us entirely on the public funds available in Malaysia. So without further ado, let's start off with Mr. Charles Dalfew. He's going to give us the perspective of the World Bank. And as you all know, the World Bank has done a number of these projects in various developing countries, especially around Asia. Okay, Mr. Dalfew, all yours.
Okay. Thank you, Dr. Chin, for the introduction, and the World Bank is very grateful to have been invited to this conference on alternative finance strategy for the water sector. I will go through a 12-slide presentation, and then we'll have a chance to exchange even more on this fascinating topic during the Q&A session. So, next slide, please. Okay, so why are we talking today about alternative finance strategy for the water sector? Let's start with a very, let's say, a daunting situation about the water sector, which we may want to compare how much investment have been directed to the WASH sector, meaning the water supply, sanitation, and hygiene sector over the last couple of decades. If we compare that with the investment needs to achieve the sustainable development goal for water, which are more demanding targets than the previous target that was set until 2015, we observe that we don't need like a 10 or 20% increase investment needs. We actually are looking for a 7-fold increase in investment to achieve this SDG. So that's the starting point of our discussion today. And interestingly, as a footnote, what we can notice as well is that the majority of the funds needed in terms of investment needs for the wash sector will be needed and directed to the sanitation sector, actually more than for water supply, especially to address the specific needs of urban sanitation across the world. Next slide, please. So having said that, noting that the needs for investment are huge, let's reflect a couple of minutes on how the sector is being financed right now in a typical developing or emerging economy. So on one hand, what do we have? We have the cost, the typical cost of a service provider, which are made of operation maintenance costs, investment costs, financial costs. And how typically do we finance this cost? Some of you or most of you may be familiar with the concept of the 3 T's that constitute the foundation of the financing of the sector. Three T's stand for tariff, taxes, and transfer. Tariff that are being collected by the service provider based on the consumption from users, from customers. The taxes that are being collected by the local or central government and can be directed also to the financing of the delivery of water services, and the transfer, so typically grants that are being directed also to the financing of the sector. Okay, so these are the 3 T's again that represent most of the financing of the cost. But what we observe in most or nearly all the developing and emerging economy where the World Bank is being involved is that these funding sources altogether are not enough to cover the full cost of providing water services. Hence, the financing gap that we need to fill at some point if we want to first fully recover the cost, but also achieve these SDG goals that we have been mentioning at the beginning. Next slide, please. You know, the previous slide that you just looked at is a slide that we could have presented 1 year ago. But in the meantime, the situation across the globe has evolved because of the pandemic, because of COVID-19. And actually, each of the 3 T's that we were referring to a few minutes ago have been, in a sense, affected across the globe because of the COVID. Think about a tariff collection that's been impacted by the COVID. Think about taxes that have been decreasing because of the multiple economic impact of the COVID-19. Think about also a transfer and grants that have been directed potentially to other sectors because of competing demand. So every element of these 3 T's have been badly affected by the pandemic and by the sanitary crisis. Next slide, please. So investment needs are huge. The typical 3 T's to finance the sector are not enough to fully recover the cost. That's a typical situation we face. So how do we finance this financing gap, this funding gap? And beyond the 3 T's, well, the only way you have to finance your funding gap is to turn yourself to repayable finance. And basically, we'll focus the rest of the presentation on this repayable financing that will come either from concessional financing, and Dr. Chin was referring to the public financing that we are able to tap to finance our sector, and also the commercial financing. What is commercial financing? Is the repayable financing, but which is not coming from public sources, which is coming from private sources. So let's dig into these two concepts and see where we get. Next slide, please. Okay, so let's start with the concessional finance. So the public source of repayable financing that are used to fill this financing gap. So as most of you know, the vast majority of this repayable financing, this repayable concessional financing, is actually coming from development finance institutions, but by nature and because they come with very attractive financing terms, because they come with very financial attractive terms, this concessional financing is very scarce by nature. And what we can notice across our client countries is that the availability and the predictability of this scarce but attractive concessional financing is being further impacted, further affected by the COVID-19 crisis. Next slide, please. So, and that's the first takeaway of this presentation. I mean, thinking about alternative financing strategy for the water sector, noting the financing gap, noting that concessional financing is scarce by nature. The point is that meeting the SDG, meeting the Sustainable Development Goals, actually require to leverage commercial financing in order to complement scarce and limited concessional financing, especially where the financial markets allow it to tap domestic commercial finance to complement public concessional financing. Of course, if we talk about commercial financing, it means that the requirements to access this commercial financing are more restrictive than accessing public concessional financing. And that's the second takeaway of this presentation. Accessing commercial financing comes also with higher requirements for the service provider to access it, meaning that it needs to move up on the credit worthiness ladder to be able to tap financing coming from private entities. Next slide, please. So let's talk about credit worthiness, and you know, this simple chart illustrates how World Bank project can help to mobilize, can help a service provider to become more credit worthy, and working on different elements, different components. First, on the institution side, I mean, typically to improve the governance, the autonomy, the accountability of service provider, also setting in place some regulatory arrangements on one hand. On the second hand, working at different level of the service provider to improve its technical and financial performance, and all of that to converge to an improvement of its efficiency and cost recovery that will in turn lead to credit worthiness. Credit worthiness, again, to improve the financial performance, the financial situation of the service provider, but also to allow it to access this commercial finance that is needed to complement concessional public finance. Next slide, please. So a quick slide to stress out the fact that commercial finance can actually be tapped, be mobilized to support not only, let's say, service provider to access, let's say, water supply and sanitation services, actually be supplied to any kind of water-related infrastructure, and including irrigation services, including water resources management. Next slide, please. And also this slide is also to illustrate the diversity of the sources of commercial financing that could be tapped to complement the financing strategy of the sector. When we think about commercial finance, we tend to think first about commercial bank loans, but actually the reality that the type of commercial financing that can be mobilized and tapped is quite diverse, depending on the size of the borrowers, depending on the type and the magnitude of the financing needs. That include, of course, commercial bank loan, but that concept of commercial financing is extended to microfinance, to vendor supplier finance, when the vendor comes also with a financing package together with this technical solution, and also for, let's say, the largest service provider, for the largest financing needs, commercial financing also involve bonds. Thank you. Next slide, please. Okay, so we talk about how the importance of mobilizing commercial finance to complement concessional finance. We also stress out the importance of having credit-worthy service provider so they can access commercial finance. Now, a last aspect, a last takeaway of this presentation is how public money can be used to actually leverage commercial finance, and this is what we call blending strategies. How public money can be smartly used to attract commercial finance for service provider and ease the transition to commercial finance. And actually, we find three ways to use blending strategies to ease that transition to commercial finance through grant subsidies, the use of commercial finance to leverage concessional finance to leverage commercial finance, and also the use of financing instruments that some of you might be familiar with through credit enhancement products. So next slide, please. So let's talk about a little bit about these three different means, three different ways to use public money to leverage commercial financing through blending strategies. So first, we can use, in some occasion, grant subsidies in order to do kind of upstream work, typically for example, to prepare the financial market, to sensitize local banks, to point these local banks, to direct these local banks to opportunities to find deals in the water sector, to prepare a portfolio of to prepare the creditworthiness of service providers, because what we see in our World Bank project is that generally it's a very gradual and long process to improve the efficiency of the service provider and achieve creditworthiness of this service provider. So it's a long-term process that can be strategically supported through grant and subsidies. A second block, a second mean to use these blending strategies is the concessional finance. To use concessional finance mainly to blend it with commercial finance in order to sweeten the deal and to soften the lengthy terms. And finally, a last block is the use of credit enhancement products, like typically loan or a payment guarantee, to provide risk mitigation to lenders for debt service payment default, or for payment default on non-loan related obligations. Next slide, please. So let's finish this presentation with two concrete examples of World Bank supported project where the blending strategies have been used to leverage commercial financing. The first example from China use actually concessional finance, and the second example from Angola use a credit enhancement instrument. So let's talk about this PPP project in China. It's a concession in rural areas to improve access and service quality in rural areas of a district in China. And basically, what the revenues that being generated by the user, by the tariff, is not high enough to ensure a profitability to the private operator. So to make the deal attractive and to be able to tap and mobilize commercial financing, we have been using concessional finance to blend resources and improve the overall financial terms of the transaction. And also we have put in place a predictable flow of public subsidies, so we can provide a predictable a stream of revenue to the private sector in order to lower the risk and attract the private operator and its commercial financing coming with the concession. Next slide, please. In this second and last example of that we would like to share with you is the example of Angola. In that case, we are not using concessional finance to blend and soften, improve the financial terms. We are using a loan guarantee in order to provide risk mitigation to the commercial lenders that have been mobilizing money for very large water projects. And actually, through the World Bank guarantee, we protect the lenders in case of debt service payment default that could happen in case the government, the involved government, was not paying its debt on due time. So that's second quick example of how various blending strategy can be put in place to mobilize private financing. So let me conclude by reminding the three takeaways of this presentation. The first, the importance and the needs to complement concessional financing with commercial finance if we really want to mobilize enough financing to achieve the SDG. Number two, the commercial finance require creditworthiness. So when we talk about mobilizing commercial financing, generally it may take some efforts upstream or in parallel to improve the creditworthiness of the service provider until they are in a position to mobilize commercial financing. And number three, blending strategy through grant subsidies, through blending with concessional finance, and through credit enhancement can definitely help to leverage, to use smartly public subsidies, public money to leverage commercial financing. Thank you very much, and we look forward to continue that fascinating discussion during the Q&A session. Thank you, Dr. Chin.
Okay, thank you, Charles. Interesting perspective. There's a few thoughts that came to me, but we'll leave that towards the end. The next one, now what we've heard from the perspective of the World Bank, who is giving us a perspective of how development funds can help to develop the water infrastructure. The next panelist is going to share with us from the commercial banking perspective. So that would really added different dimension to this alternative finance strategy. Bearing in mind that obviously the challenge is obviously whether it is viable, right? So, and we have Yang Mulia Raja Amir, who is the head of the debt capital markets in HSBC Amanah, and he has also is quite experienced in raising some of the bonds for the utility industry. So let's hear from him from his perspective. Yang Mulia Raja Amir, all yours.
Thank you, Dr. Chin. Thank you so much for the time today, and thank you, Charles, as well for for a very interesting prelude to the discussion that we have in store for us today. So I think first of all, just let me say a quick thank you to the organizers of Asia Water 2020 virtual conference. This topic is obviously very timely in the current situation that we find ourselves. Obviously, we would love to be with you in person today, but because of the situation that we find ourselves, virtually is something that I guess we need to get used to in this current time. But I think essentially this topic, alternative financing strategy for the water sector, is something which is very much timely as we see governments at the moment now really focusing on the broader economic recovery plans, because of what's happening, and that obviously has a bigger impact on society. But having said that, obviously the right to clean water is a fundamental human right. And it's also ingrained in the United Nations Sustainability Development Goals, which the United Nations has published. And I mean, various things that we see currently, every day we hear news about water cuts in Selangor due to pollution and various other human interventions or human errors, so to speak. So therefore, I think it is something which is very timely. And without further ado, I would be pleased to go into my presentation in terms of my experience, or what the bank HSBC Amanah in Malaysia has had some experience in financing some of the projects within the sector. So if I can just go to my first slide, please. Okay, so these are these are a non-exhaustive list of the water sukuks in Malaysia. As you can see from from the table in front of you, there's two forms of financing that we have seen within the debt capital market space in Malaysia. And I'll go into the credit, the credit worthiness, which Charles pointed out, which is something which is extremely fundamental. We can't run away from the fact that, notwithstanding the noble intentions of financing such projects. At the end of the day, the investors who are ultimately the subscribers of such instruments, will be looking at the creditworthiness of the project, the ability to repay timely debt obligations, and so on and so forth. So that is obviously key at the moment, irrespective of whether it's a public-private partnership or it's in the form of a government, state government, for example, raising the funds directly. So if you look into I'll just talk about the corporate debt first. So if you look at the Pengurusan Air SPV Berhad, they have established a 20 billion ringgit program, of which to date they've issued in the context of 12 billion ringgit. So obviously, Pengurusan asset is slightly different. This was under the Water Services Investment Agreement, whereby in order because prior to this, as some people would know, that the respective states were managing the respective water infrastructure assets within their respective states. So as a result of this, there was some inefficiencies within that model, and the government took it upon themselves upon the reconstruction of the water supply agreement to in order for Pengurusan Asset Air Berhad to own all the infrastructure, which is heavy on the balance sheet of a lot of the water suppliers. So within this restructuring, Pengurusan Asset Air Berhad essentially entered into separate agreements with each of the water concessionaires within the states, and use that funding raised from the capital markets to repurchase these water assets, therefore freeing up balance sheet on the respective water concessionaires' financial statements, and allowing them to concentrate just on the job at hand, which is to provide clean water and supply water to the population of those states. So obviously, PAAB has the shareholder, which is the Ministry of Finance, which is the government of Malaysia. So therefore, that that coupled with the clear income source for PAAB, which is the rental income. So once it buys back all the respective water infrastructure assets from the states, which it will raise the bonds to finance those acquisitions, it will then subsequently rent or lease out those water assets to the respective state concessionaires. So therefore, that was the structure that they employed, and because of the shareholding and the clear revenue stream, they were able to set up a 20 billion program, and to date draw down circa about 12 billion ringgit. And then moving on to within the corporate debt space as well, we see Syarikat Air Johor Capital Sendirian Berhad establish a 650 million program size. And to date, they've issued about 610, so there's about 40 million ringgit left on that facility. So, if we talk about Syarikat Air Johor, they are the SAJ Capital. They are the sole concessionaire within their state to supply treated water to the respective populations of the state. So again, that's the concession part of the of the transaction, which adds the bankability and commercial feasibility to the transaction, which was mentioned by my colleague just earlier before this. So underneath this program, they obviously have a clear income stream from the supply of water, and therefore that has allowed them to raise financing within this market. And also, I mean, obviously shareholding is something that we need to be cognizant of. So Syarikat Air Johor is owned by Ranhill, which is a corporate in Malaysia, together with 20% owning by the Johor state. So therefore, there is the element of shareholding coming from the promoters, which is also the state government and also the concessionaire, which has a 45-year commercial lease, concession agreement to supply water. So therefore, based on this, and then the supply of water, which obviously has a revenue source, they are able to raise financing in the market. So that's on the corporate side. Now, if we look at the project financing side, again, Malaysia benefits from a very deep and liquid project financing market. It's one of the few, if not the only markets within, globally, which has a very vibrant greenfield project financing bond market. If I talk to my counterparts in other countries, they're always amazed by the fact that Malaysia has a greenfield project financing market. Typically, if you look at other regions or other countries, if you go to the bond market, you already need to have constructed a plant or constructed an asset, and then thereafter there's no construction risk on the table for bondholders, and thereafter you're able to raise financing, which is pretty much always the refinancing of an existing bank loan. So the bank market comes in to supply the early stage financing, and then the bond market comes to take it out. However, in the Malaysian ringgit market, because bondholders or investors in Malaysia are very much in tune and understand, the nuts and bolts of concession agreements, power purchase agreements, renewable power purchase agreements in the case of Telekosang. So they understand the bankability of these concessions, and therefore are able to we are able to raise financing from those particular transactions. So if we talk about consortium KAJV Sendirian Berhad, which is a program which we HSBC established, we'll go into more detail in the subsequent slide. But I mean, essentially what it is that the company KAJV is a consortium. So this is they have been awarded a project to construct and refurbish a 120 milliliter per day water desalination plant, including some refurbishments in Kuala Terengganu Utara. So that's given by the state government of Terengganu. So as a result of that, of that concession, they obviously needed to raise the financing to kick off the works to construct the plant. However, again, as I mentioned, construction risk is something that bondholders have, they're able to take, but it really depends on the, who is going to be the operations, who is going to undertake the operations and maintenance, and so on. So therefore, under this structure, basically, which I'll go into more detail in the subsequent slide, but essentially the obligo or the payment obligation lies within the state, who has provided a concession to KAJV to construct and refurbish the plant. And upon completion of certain parcels of work, that the concessionaire will raise financing in the bond market backed against an obligation to pay by the state government of Terengganu. So this marries, two financing situations. One, the state government of Terengganu needs the infrastructure in place, but they don't want to incur, the full amount of that particular concession in their state budget upfront. So what they do is that they defer the obligation to pay over a 12-year period in this particular case, and that that smoothens out the budgetary requirements from the state government, and therefore they're able to lend their name to the financing, in which bondholders are comfortable with the state government of Terengganu. And that also led to that was a subsequent issuance where the state of Terengganu was in obligor. Prior to that, Beijing Water Group M Sendirian Berhad, which is owned by Beijing Water in China, which is ultimately owned by the Beijing municipality. They themselves received a concession from the state government of Terengganu to, similar to KAJV, to construct and refurbish actually a bigger size, a 255 milliliter per day water desalination plant in Bukit Sah, Terengganu as well. But this structure was slightly different in the sense that the state government of Terengganu will only pay upon the completion of the works and completion of the construction and the refurbishment over a 5-year period. So therefore, in Beijing's case, they still needed to go to the market to raise financing for the initial works, including providing including construction risk applicable to the transaction. So we heard from Charles about credit enhancements. So in this case, the Beijing Water Group had to provide a liquidity facility, which is basically a credit enhancement in the sense that should there be insufficient funds within the designated accounts in order to make for the company to make respective payments, the parent of Beijing Water Group in Malaysia will step in to provide that liquidity facility. And because Beijing Water is rated on an international basis A3, if I'm not wrong, A3 A-, therefore the actual rating of this, due to the credit enhancement, it was given a 1-notch uplift over the state of Terengganu's rating, which is AA-. So this transaction, as you can see, consortium KAJV, which purely relied on Terengganu state paying, was AA-, whereas Beijing Water, which had in addition to the obligations from the state government of Terengganu, but because there was an element of risk and the parent had to step in to provide a guarantee during the construction phase, therefore the transaction benefited from a 1-notch uplift, getting an AA flat rating. And then finally, on the right-hand side, Telekosang. Telekosang is a beneficiary of a renewable power purchase agreement with Tenaga for 21 years. Sorry, with Sabah Electricity over 21 years. And essentially, again, as we mentioned, when there are concessions, when there's power purchase agreements, when there's any form of concessions, this is something which is bankable. And therefore, in this particular situation, on the back of that 21-year power purchase agreement, Telecosang was able to raise 470 million ringgit in the market. And again, this is greenfield, so it's for a mini hydro project, 2 projects, one being 24 megawatts and another being 16 megawatts. It's a mini hydroelectric in Sabah, in Tenom, Sabah. And notwithstanding that, also the shareholding structure of Telecosang includes 30% from Yayasan Sabah, which is again, something which is good from a bondholders' perspective. They were able to raise 21 years financing up until the the maturity of the PPA for a size of 470 million. So those are just a quick snapshot of 5 transactions within the Malaysian context. I won't speak about the global context, apart from the fact that we saw, just to update panelists and also the audience today, that globally we've seen, for example, recently there was a $500 million bond raised by the Manila Water Board. And this was a sustainability bond. So this was and it was unrated. So obviously shareholding structure is important. So this is owned by by the state municipality. It was an unrated structure. They managed to raise $500 million, and also it was termed a sustainability bond because the use of proceeds were going to be deployed for for the provision of clean water. So again, these as we go into the next slide, we can see some of the commonalities and also the themes around sustainability. So if I could move to the next slide, please. Okay, so very briefly, we've talked about the KAJV structure, but essentially what we wanted to highlight in terms of the structuring aspects, because this is quite important, as on the theme of bankability and commercial viability. So Terengganu, as mentioned, has a large requirement to supply clean water to the populace. Most of their pipings were pre-independent, so most of their pipings are needed to be upgraded in addition to refurbishment of existing water plants. As mentioned, because the payment was deferred over a 12-year period, they were allowed to defer. Not every year do I need to hit it for the full project size. I can just divide that by 12, so it's more palatable for the rakyat and for the state financiers. And then because of that construction risk, which we mentioned, which is something which is although the project bond market, as I mentioned, can take greenfield financing, but those are really against a power purchase agreement, for example, and the track record of the sponsors. So in this case, KAJV has obviously 3 sponsors who were who have various technical abilities and so on, but not in the position for bondholders to take that construction risk. So to remove that construction risk off the table, how this transaction differed slightly from Beijing Water, which was, you build me this water desalination plant and I pay you over the next 5 years. For this particular structure, if you can look at the project funding cycle, which is at the bottom of the table. So how it works is essentially the consortium will draw down of interim facilities which are provided by banks. So the banks come in to take off the construction risk off the table for bondholders. So they will provide the initial financing where the concessionaire is able to then draw down off those facilities and complete some of the earlier partial works. Once those partial works are completed, they then submit what we call a completion notice to the state government of Terengganu, who then verify that the works have been completed according to specifications and is up to standard. And thereafter, they will then produce what is called a facility payment certificate, just for that parcel of work completed, not for the whole project, but just for that parcel of work completed. So with that parcel of work IOU on the back of that parcel of work completed, the concessionaire then goes to the bond market and raises the financing backed against that IOU from the state government of Terengganu. And in addition, to make it even more sweeter, we over collateralize the obligations to pay. So if the obligations to pay are 100, for example, we would, if the bond that they raise is 100 million, for example, we will package it with obligations to pay of 150 million. So it's 1.5 times to that extent covered. So it's over collateralized. So then they raise the financing in the bond market backed against the obligations to pay. And then once they receive those funds, they then repay the interim facility provided by the banks, and that facility, because it's a revolving facility, then is available for utilization again, because they've paid it off from the proceeds of the bond, and that frees up the limit so they can then draw down again off the interim facility, and then after that they are able to then submit works completed, get those facility payment certificates, raise the bond again. So that's the cycle, that's the life cycle of the transaction, which is from start to end, and it removes construction risk off the table, allows bondholders to only seek recourse from the state government of Terengganu via the unconditional and irrevocable obligation for the state government of Terengganu to pay. There's no construction risk on the table. There's also, in addition, we talked about the credit enhancements or commerciality. There's a letter of undertaking from the sponsors to cover any cost overruns if it's required. And there's also obviously a track record in the form of, experienced by the subcontractors. Okay, if I can just move on to the next slide to conclude. Okay, so again, as mentioned, Malaysia has a very conducive financing environment, and when it comes down to the likes of water desalination, aquatic features, and so on, the government of Malaysia has really taken a very, very proactive step in in basically providing the infrastructure for companies within Malaysia to raise financing, which falls into some of these elements, which if they are deemed as green, social, or sustainable, they meet the eligible SRI projects. SRI is Sustainable Responsible Investment. So you can see from this table over here, SRI is, they have set out very clearly what is the eligible projects, which are deemed as SRI. So they fall into green, they fall into social, and they fall into Wakaf as well. So you can see that with regards to water, you have, as mentioned, renewable energy, sustainable water and waste management, aquatic conservation, and also provision of affordable basic infrastructure, all falls within eligible SRI projects. So what are the advantages of issuing a sukuk which falls under SRI? You get certain tax treatments and benefits, which I'll talk about in the subsequent slide. But essentially, they've laid out a clear and concise framework whereby, if you raise financing under an SRI, you have to put in place procedures for the management of the proceeds. How do you manage these proceeds? Whether they go into a separate account or into a general account? How do you utilize these proceeds accordingly? And then finally, on reporting. So on a yearly basis, the company who's raised SRI sukuks need to provide via either website or via some form of publication to investors in terms of what is the development of that project, how much funds have been deployed towards what purpose, and lastly in terms of how much clean water or how much green energy or how much how much sustainable social projects have you achieved from this deployment. So there's a very clear framework and guideline provided by Securities Commission as well as Bank Negara in order to provide a very a very good infrastructure within the capital markets in Malaysia. So if I can move to my final slide, which is still touching slightly upon the the benefits of an SRI sukuk. Sorry, Husna, if you can move to the next slide. Okay, so finally on this slide is some of the benefits provided by the Capital Markets Association, the Malaysian Industrial Development Authorities, as well as the Securities Commission. So under the previous budget, which was approved and is valid until the year of assessment 2023, if you undertake any green financing which falls within either project assets or services, there are taxes that you can enjoy from MIDA in terms of raising financing for these particular projects. And then from the Securities Commission, as mentioned, so if you raise an SRI sukuk, which is approved by the Securities Commission as an SRI product, then all the cost associated with establishing that program is tax deductible until the year assessment of 2023. Okay. And you can see that there's even flexibility in the sense that 90% of proceeds raised are used for eligible. So you still have 10% to use for other things such as the repayment of shareholders' advances, for example. And then, as mentioned, when you raise an SRI sukuk, because the SRI guidelines in Malaysia are very much they tie very much into the ASEAN Green Bond Standards, which encourage issuers to appoint a second-party reviewer to provide, to provide an assessment on the company's green framework, i.e., where they will deploy the proceeds, how they intend to do it, and so on. And if you engage a second-party reviewer, you are required to, obviously, there's cost associated with that. So under MIDA, there is a grant scheme which allows companies to claim up to 90% of the cost associated with that second-party reviewer, and it's up to a maximum amount of 300,000 per issuance. So again, just to sum up, as mentioned, again, there is a very vibrant capital markets in Malaysia. Infrastructure, project financing, water-related has been issued before, either in the corporate or project financing space. And because of these, use of proceeds fall within the green, social, and sustainability eligible criteria. There are tax benefits provided by the government for issuers to assess the capital markets. So that concludes my presentation, and I thank you for your attention.
Okay. Thank you, Rang Mulia Raja Amir. So we heard from the banker how we can tap the capital markets directly by the water companies. So the next panelist we have, the final panelist we have, is Tuan Haji Muhammad Hanifah. Now, I had the pleasure to work with Hanifah for a number of years from the very beginning when we worked together on the water reforms in Malaysia. So he's coming from the perspective of an operator, and Tuan Haji Hanifah has been with IWK for a number of years, so he's certainly very expensive, very familiar with the water industry, especially for the sewage industry. He's now the Vice President of MWA. So all yours, Hanifah. How long will you take? I'm just conscious of the time.
About 10 minutes.
Okay, great.
About 10 minutes.
Wonderful, because we need a bit of time for question and answers. Thank you so much. All yours. The floor is yours.
Okay, thank you very much, Dr. Chin. Glad to have shared the same stage with you again after some time. Okay. Good afternoon, everyone, and may peace be upon all of us. We have heard from both Charles and Raja Amir. They have presented elegantly on the overview, on the options and experience for water financing based on some real life experiences. So I'm now going to share one aspect of water financing, which is sanitation. And I'm going to talk based on my personal experiences over the last 30+ years, both having served in the public sector and also the private sector, and also have the opportunity to actually be involved in World Bank loans and similar loans, soft loans, and other means of financing. So what I'm going to talk today is more on the practical approach of what have been done, what are the successes, and what moving forward, what are the additional things which could be done to actually further enhance the financing of the sewerage sector. So in Malaysia, I was involved from the very infancy stage, setting up a utility from practically scratch without any resources, including financial resources and so on. And today, after many years, you can see some successes, but there's still much more successes to be achieved. So if you look at this particular slide, first of all, we need to know what to finance, and then why do we need to finance, and then only the real question of how to finance will come in. So if you look at the worldwide view of water and sanitation, this picture actually depicts that out of the 7 billion over human being on this planet Earth, still close to 2 billion people do not have access to safe drinking water. So there's still a lot of room for improvement in this area. Of course, sanitation is even worse still. More than 4 billion still do not have a proper, safe way of actually irrigating the wastewater. And more than 80% of the world's wastewater today are still going back to the environment untreated. So if you look at the global map below in this slide, you can see this is the snapshot of the a reference from WHO and UNICEF of the global level of sanitation coverage worldwide. And you can see that Malaysia, in the dark green circle there, is actually at par with many of the developed countries, US, Canada, Japan, Australia, and many of the European countries, because of the right funding allocations by both the private sector and the public sector. You'll be surprised that for sewerage in Malaysia, close to 70% of the funding actually comes from the private sector. And I will actually elaborate this so on. So the experience here can be actually shared worldwide, and there's still a lot of room for improvements on the what, why, and how in terms of the financing. So the next slide. If you look back home, next slide, please. Way back, back home, you can see on the left-hand side, there's a history of Malaysia being colonized for more than 500 years, by the British, Portuguese, Dutch, and of course the Japanese. And when we inherited independence in 1957, the sort of sanitary system or sanitation facilities which we had is still considered the basic primitive systems in the form of 4-flush, pit latrines, bucket latrines, and so on. But after independence, I think the government actually looked at having more toilets for everyone as a start to address the public health issue. And then moving on, if you follow the graph on the right hand side from the top to the bottom, you can see the evolution of technologies from the basic primitive system, then moving on to septic tank, EMOF tanks, more regional facilities, and so on. Now, if you look at the line below that, it is moving away from addressing public health to protecting the water resource, and now probably protecting the environment, and later on, of course, the carbon exchange, the climate change, and so on and so on. So if you look at the line further below, we have started from a no financing regime, including no tariff, towards the current financing regime which we have today, which is more or less a social political tariff structure with some additional sort of financing, moving towards a future financing, better financing regime. And below that, if you follow, these are the management of the various sector of the sewerage sector, starting from the sanitary boards, and then municipalities, and the Ministry of Health, and then moving on to a privatized management, and also looking towards integration into the future. And you look further down in the last line there, these are the various laws which has been put in place. So Malaysia, why it is green in the previous slide is because the last 60 years since independence, I think there's a lot of thought being put up, with one exception, which is financing. Up to the 7th Malaysia Plan, literally there was very little financing for the sewerage sector. Bulk of the financing was mainly from developments and the private sector financing. It's only after the 8th Malaysia Plan, today we are in the 11th Malaysia Plan, the tail end of the 11th Malaysia Plan. I think we have reasonable financing from the government, but we cannot totally be dependent on government financing to actually progress forward. I think these are the lessons learned which can be shared with many other parts of the community around the world, and which I'd like to share in my the next few slides. Next slide, please. Next slide, please. Okay, just to have a quick worldwide view of sewerage management structures. Most of the countries, they are all actually still managed in a very ad hoc basis, very piecemeal basis, and the project financing comes in just for one viable project where they finance it and try to actually recover the cost. So from the various financing schemes, I've looked around and I've actually selected the 5 most, from my perspective, reasonable, doable structures. One is, of course, in the Netherlands. The rest of the 4 is actually in Asia, which is South Korea, Japan, Hong Kong, and our closest neighbor there I've highlighted in black, Singapore. So when I was working in City Hall, Kuala Lumpur, we tried to actually finance sewerage on our own by taking the World Bank loan. And I think we had a great master plan, to regionalize the whole sanitation sewerage management in KL. These master plans were developed in the 70s. We borrowed the World Bank loan for phase 1, and then the rest of it we were actually stuck just paying back the finance for the first phase, and we could not really progress to actually implement the second and the third phase, to actually achieve the real regionalization for the KL master plan. Later on, by driving policies, there's both structural and non-structural aspect. Policies are the ones which actually helped to a certain extent to indirectly finance many of the sewerage improvements in the city of KL. And then, of course, with the enactment of a new law, which is the Sewerage Services Act, by actually federalizing the responsibility of sewerage management to the federal government, then you can see actually a much more holistic view, holistic policies, holistic actions, standardization, and so on, which actually benefited. And if you look at the Singapore example, this is basically what actually happened in Singapore. Under PUB previously, they were also struggling. The rivers are also equally polluted by sewage and so on. But with a very great plan, the what, they actually had a long-term plan. They had targets, and then they need to actually monitor where are you within the target, and then they actually finance both the private and the public financing, and also look at different avenues of incomes to actually finance the sewerage. And that's where you can see the transformation of water in Singapore. Likewise, you can see Hong Kong, and also in Japan, and then also in South Korea. When come to the discussion, we can probably elaborate further. But these 5 countries have a lot of similar traits in actually improving the water and the sanitation sector. Next slide, please. Next slide, please. So the first question is, what is to be financed? So everyone knows there's 2 key expenditure in water and also any aspects of water resources, water supply, including sewerage management. The first expenditure is, of course, the capital expenditure, the building, and there's so many components of the capital expenditure. Some can be by grants, some can be by private sector funding, some can be by levies, tariff, some can be by penalties, some can be by bonds, and so on and so on. Likewise, for the OPEX, although bulk of it should come from a certain bucket, but there's still certain elements of funding which must come from the shared bucket, which will actually co-finance the long-term sustainable operations of the sanitation level. And the economics actually comes together with the economics of the environment and economics of the country itself. If you do it at the national level, there's scale of economics, and if you do it at the state level, there's still some benefit. But if you also do it at the regional level, there's even better benefits. When you talk about economics of the environment, then you not only look at sanitation, but you also look at the water resources, water supply, and drainage, and all that in a wholesome. This is what is meant by the holistic management. If you look at the next slide, please. Next slide, please. So here I try to actually break down the how. Just now I've talked about what needs to be financed is actually the improvement of the overall national sewerage system. So in that, first of all, you have to have a clear plan. Even if you have a 30-year plan, the plan must be very clear. The plan must have a short term and also medium term and also long term with very clear targets. And then the why, you have to actually question, why do you need this particular project? And this is where all the financing and the accounting and also the net present value and the best ROI, and the ROI is not only linked to the financing, but also the ROI to the environment, to the public, to the consumer, and so on. So at the end of the day, if you break, I've actually done this slide on my own. If I put income to all what needs to be financed, you start from the bottom there. First income comes from, of course, the user and the polluter. So this is for the removal of the waste, as well as for the non-compliances and so on. this will form for the capex a certain portion, probably about 30–40%, but for the OPEX, it might actually form up to 70% of the income. Then next, you look at the development and the community cost. This is for every new development. You can see that local authority, under the Local Authority Act, they had this responsibility of providing sewerage services. So then the developer have to actually fund this. And this is where, if you put a cost to all the sanitation system which we have in this country, you can actually argue that close to 70% of the infrastructure is actually funded by the private developer. And moving forward, there's a thing called sewerage capital contribution, property taxes, and so on. This is basically, for enhanced land value and the property value. The third portion, it actually comes from the water resources protection and water recreation. So there's a cost to it, which should be funded through some general taxes, levy, cess charge, and so on. So this one, it actually encompasses a bigger bucket. And then you look at public health, the fourth bucket there, public health and environmental improvements. This also will come from environmental grants, taxes, penalty, and also the end result is for a healthier and pleasant place for everyone. And then you have the beneficiaries, which are the economy, the tourism, the industry, and so on. So this bucket, a certain portion should come from the grants, taxes, and other related, from the commercial taxes and so on, tourism and so on. So by having good sanitation facility, the state and the local councils also benefit. For example, if you look at why people want to invest in Penang and also in Kuala Lumpur, because they have very good sewerage infrastructure. So while the local authority benefits, they also should return certain tax for the betterment of these services and also the enhancement. So this is where I think they need clear policy, to actually look at some income coming towards the enhancement of this. And also the last bucket is the one in green, incidental incomes, which mainly comes from the new financing avenues, from the resource recovery, trade effluent management, land utilization, asset utilization. You've got miles and miles of sewer lines, which you can use for telecommunication, for example. You got big lands for sewerage sites. You can use for telcos and telecommunication. These are all other incomes, including other means of byproducts. There's so many other nutrients which can be recovered from the sewerage services. So if you look at the beneficiary slide in here, I give you a very quick example. In the case of Penang, Georgetown. Georgetown was a city developed during the British era. So during those days, they have actually developed in the heart of the city a central sewerage system. But this sewerage system actually series of pipes connected to the sea. So it's actually a sea outfall. And those days, the sea is the sewage treatment plant because of the currents, the dispersion, and the mixing, and so on. And the population was not so huge, so the sea could actually behave as a sewage treatment plant. So the consumers then were actually charged, even before the birth of Indah Water and so on. During the old municipal days, during the Majlis days, they were charged based on the type of toilets and so on. Now, the government then went and built a beautiful plant costing about 500 million ringgit to actually treat the sewage. Now, to the consumer in Penang, whether you have a 500 million sewage treatment plant or you discharge the sea is not their problem actually. Their problem is at the house, if the sewage is discharged and you charge me a cost, how you treat it is the state, the local authority, you are responsible for it, and also probably the ministry and so on, the government. So because of the improvement by building this new plant, the landscape along this area, instead of discharging to the sea, and it's a rundown area, nobody wants to stay in around the area. Today, the area is transformed. You can see many apartments coming up. There's a lot of income for the municipals by the taxation and so on. There's a lot of income from the state. There's a lot of income coming from the tourism. So who benefits from all this? This money actually goes back to all these parties, but it doesn't go back to the sewerage sector. And this is where I think you need clear policies moving forward to actually recoup some of this funding and put it back for the better enhancement. And when you look at the sewerage services, there's existing, there's improvement, and also there's expansion. So this is where you have to actually juggle to put the right bucket of money in the right pool. And I think this, moving forward, this financing option is what really needs to be looked at, in doing the how. Just now I mentioned about the what is the plan, the why do you need this plan or this project, and it should not be on a piecemeal. When it's done on a piecemeal, the finances are stuck in one project, and the beneficiaries will be not on a more holistic view. And finally, if you look at the next slide, please. Next slide, please. So these are the new revenue streams from the sewerage management. We should actually move away from sewage as a threat, wastewater as a threat, to wastewater as a potential new resource. So instead of just treating the sewage to meet compliance levels, I think we should actually start treating sewage to actually look at resource recovery. I think earlier before this talk, the ministry, the KSU, the Secretary General was talking about the new era, the new dimension, and he was talking about circular economy. So this is where I think you have to look at sewage as a water reclamation facility. That means you treat, you meet certain level of standards, you don't discharge it back to the dirty river, because there's so many other sources of pollution in the river. So what you need to do is recoup back this water, sell it for non-potable usage. There's another income there. The biosolids can be converted either to biofuels, also fertilizer, and there's another stream of income there. You got this biogas, which also can be converted to energy, and there's a lot of case studies which are already being done. It's practical, so we have to look at the roadmap the next 25 years on see how much more you can get from here. And then we also have other incidental incomes through treatment of compatible trade effluents, utilization of lands, of the sewage lands and so on for other means to recover costs, asset leasing, solar and renewable energy, telecommunication, neutral removal, and so on, neutron removal, and so on. So these are all the other income streams which needs to be juggled to be put into the how. And finally, we come to my last slide here. Next slide, please. So once you get this big picture, then we can decide if you follow the numbering there. The first one is, what are the direct financing means? The direct financing, of course, comes from federal, state, and regional grants and loans. And then you got the indirect streams, which comes from international loans, soft loans, revenue from tariff, levy, charges, subsidies, compensations, and so on. And then you move to the third one, which is indirect financing from general taxes, which I explained just now, from various other incomes and penalties and so on. The fourth one, then you go into infrastructure and capital charges, including new property connection charges, expansion charges, and so on. And the last stream of financing is from the new income through incidental activities via the circular economy. And then only we talk about the actual mode of financing, which I've listed down. There's so many. I think Charles and Raja Amir have shared many examples. So once you have seen the big picture, the picture have to be very holistic. It has to be transparent, and then it has to be sustainable. For us to meet the Sustainable Development Goal number 6, which is clean water and sanitation for everyone by 2030, I think we have to go back to basics, argue the what's, argue the whys, and then when you come to the how, then we have to find and be more flexible, rather than just relying on government funds and the tariff. Tariff is one income. I can share the model of, I remember when I went to a meeting in World Bank in Jakarta about 15 years ago. One guy in World Bank asked me, how did Malaysia become successful in actually federalizing the sanitation services? Because that was the turning point in actually improving sanitation at a national level. So my answer was, You only need a crazy guy, a crazy businessman to sell a bright idea to the right politician for him to make a decision. And from there on, although that model didn't really succeed, the concession I meant, but I think it opened up a lot of new things. It opened up federal laws, guidelines, regulations, standardization, and so on, which actually built up the industry. It built up consultants, contractors, suppliers, manufacturers, capacity building, and in that progress, you actually develop an industry, and the development of the industry also develops manpower, workforces. Together with that comes the funding, and creativity and creation. Creativity and innovation also sets in, and this is where you find various modes of financing coming in. But if you just don't have the big picture, when people come to you and say, I'm going to finance this based on a BOT, or I'm going to finance this based on a bond, I'm going to finance this, then you're stuck with that one financing. This was my experience in City Hall, Kuala Lumpur, taking the World Bank loan and financing the first phase of the KL Sewage Master Plan. Then we were not able to actually sustain in the future. This is where now I think the 5 key points which I shared just now needs to be further deliberated, needs to be supported by new policies and new ideas, and a plan must be set. Today we talk about SDG 2030. At least we must have a plan for the next 10 years. Maybe you also have to have a plan for up to 2050. And then with that plan, we have the immediate, the short term, and the long term. And by this, we need transformation in the governance and the policies so that the actual financing modes can actually take its place and come in to actually sustain this. And I think the experience here actually can be a guide to many developing countries which is still suffering from good sanitation practices worldwide. So with that, I'd like to stop here for the time being. My last slide, I think that was my last slide. I'm happy to actually answer any questions moving forward. Thank you, and back to you, Dr. Chin.
Thank you, Tuan Haji Hanifa. That was more than 20 minutes. We don't have any time really for any questions at all. So it's way exceeded our time. So what I'm going to do is this. I'm going to summarize all these questions into a commentary. Now, Malaysia started the water reform back in 2004. And from that on, we led to the promulgation of the pieces of legislation in 2006. And SPAN was effectively operationalized in 2007. SPAN is the water regulator. Now, one of the areas that we have very concerned all along was one is the operational efficiency, and the other one is the funding part of it. And so we have Mr. Delfield, who shared with us from the perspective of development funding. And then we got Mulia Raja Amir, who shared with us on tapping the capital markets. And obviously, the sewage sector always remain a challenging sector until today. Now, the thing is, in terms of funding for the water sector, number one is that the government does not want the burden, neither in terms of subsidy nor in terms of guarantee. So the question is that when you have that situation, how are you going to fund it? Number one. Number two is that, you see, it is easy to fund a state, it's easy to fund a city because it's viable, right, in the urban areas, but that doesn't solve the rural areas. So the funding part of it, got to look at it holistically. For Malaysia, we need to look at it, the country as a whole, and that's how PAP was set up. So I think from the perspective, maybe I will just hear a very short comments from the three panelists in relation to these areas. How would, for example, from the perspective that we do not have subsidy, we do not have any guarantee on its own, the water sector, is it viable to fund that? And to be, for the World Bank to be an effective partner, and bearing in mind that the management side of it, it got to be done by the local management. Would that be an issue? And so, for example, so from that point of view, how, for the type of capital markets, given those constraints, is it viable? Okay, short comments from the panelists. Shall we have Mr. Delfield?
Okay, I will try to be very brief because I think we have been all very passionate about our topic and very talkative, so we exceed by far. But you know, I think, and I really like the presentation of Raja Amir and Iranifa because I think they were complementing very well. And what I can, for example, if I refer to the last question from Iranifa, I think it was echoing what I tried to convey during my presentation, is that when you start working in a water sector in basically any of our countries, it's a very long-term process, and the idea is really to move forward in a very gradual manners, and working at the same time on trying to achieve gains on efficiency, and at the same time, as you improve efficiency, improve the funding part, and create thus a kind of a virtuous cycle where better efficiency leads to better financing leads to improved service quality leads to improved revenue collection, better perception from the decision maker that will be keen on directing more resources to the water sector. And because you improve your financial situation, you can access more commercial financing. So you really want to create this virtuous cycle to gradually improve your performance and move up the development and creditworthy ladder. So, and this is where World Bank and other development agencies can play a role to actually put some money at the beginning of the process, where you can only rely on concessional financing to start this virtuous cycle, hoping that as you move forward, as you improve efficiency, as you improve performance, financial and operational performance, you can gain more and more access to commercial financing to complement this initial funding coming from public sources. Thank you.
Okay, thank you. Raja Amir, in 2 minutes, your comment on those.
Yeah, so it's obviously, okay, so the brief answer to this is that at the forefront of, there needs to be a commercial and viable proposition over here. So without there not being a concession, for example, just 1 second. Okay, sorry for that. So without, there needs to be some form of concession. There needs to be some form of shareholders or sponsor support in order to make something, in order to make the proposition viable. So you can see in the case of KAJV how we did it. We realized the nuances. We knew that the market wouldn't take the construction risk. So we did it in such a way that benefited the state by deferring the payment, and also allowed a consortium which is not so known but has been a benefactor of a sizable contract to seek funding from the capital markets once that project has been completed. So I think we've seen various innovative financing solutions for various industries within the context of the capital market space. So it's just that sort of understanding from investors what they can and cannot do. But in the absence of that, Doctor, I think because we were also looking at some financing for projects which are river rehabilitation, for example, but there's no clear revenue source. So those things are posing a challenge to us, right? So in absence of any clear revenue source thereafter, it becomes slightly challenging without any sort of guarantee or letter of support from the state who's trying to develop this project. So therefore, you need to get a bit more innovative if you have a lack of credit support.
Okay. All right, understand. Thank you. Hanifa, you shared with us the various potential alternative sources of revenue. Do you think that in terms of financing for the sewage sector, does it help if there was a merger between sewage and the water services sector?
Yes, if there was a right tariff, but tariff alone, like I tried to explain, will not cover the entire full cost recovery requirement. There's still a protection of the water resources, protection of the environment, beneficiary of the environment itself, businesses. So I still feel the what, the why, and the how needs to be asked, and by having the clear plan, and then the integration is just one aspect. But when you talk about real integration, you integrate both water and sanitation becomes, and I showed the model just now. Most of the successful countries are actually integrated. Apart from the integration itself, there's other elements which needs to be looked at. Of course, integration will bring along a lot of economy of scales.
Okay, thank you. All right, that leaves, there's one question, very short question that's been directed at me, is that if I were to look back at current challenges faced by the water sector, what would I do differently to advise the Malaysian government? This is a very searching question. Okay, and my answer to that question is only one word: governance. I would have advised them on the governance aspect, that from the government perspective, personally, and I think generally people knows my view, water should not be politicized. And I believe that politicians should not be sitting on the regulatory board, nor sitting in the water supply companies. Okay, and let it be professionally run, because we have situation that looking back from the past experience, when it comes to revision of the water tariff, we got the opposition state waiting for the ruling state to change, and no other one is going to take the lead, and because of political issues. Okay, so with that note, I think we've answered all the questions effectively, and now I hand it back to the organizer. So thank you very much to all the panelists, and it's been a great pleasure hearing from all of you, your thoughts and your experiences. Hani, all yours. Thank you.
All right. Okay, before we end the session today, we would like to say thank you for joining for our alternative finance strategy for the water sector virtual conference. If you have not visited our virtual exhibition hall and technology symposium, please do so. Also, don't forget to follow us on all our social media platforms. Once again, thank you for joining today and have a great day ahead.
Thank you.
Thank you.
Thank you very much. Have a good one.
Thank you.